Good morning, everyone. Welcome to the Eurotrade. Happy Tuesday. Let's see what we have. Before we begin, if we're meeting for the first time, I'm Mark Stalker D, your host, and I've been trading for almost 20 years, coming up to like over 19 years. I'm a commodities trader, so you will see me focus on precious metals and energies markets, maybe some DAX if something comes up, but we can't trade DAX yet on Topstep, so that will be for maybe future reference at some point. Alright, so usually what we see around this time of day on metals is gamma pinning. So effectively prices tend to settle at a level with the highest concentration of open interest, and then it sort of bounces there until we get to London Metal Exchange Open, which is much later. It's in about a couple of hours time. So yeah, let's have a look at levels. For now, gold and silver are both sitting around the former Asia low. They made a decent attempt at going lower, but ran into the COMEX value edge, the outer value edge, and seemingly bounced. Now, if we take the regular behavior, statistical probabilities of what happens at this time of day, I expect that this range is probably going to become our reference point. So that would mean, put on your Dolby hat, and then draw a box like this. So if you are still thinking longs on gold, your area of interest would be closer to this low where the London Open wicked down to. And let's have a look at how the large time frames are doing. So weekly time frame distributing a little bit, but there is a slight upside skew here. However, all of this is also a range on the weekly. Something interesting happens in December. So usually metals tend to settle, and then in December it establishes sort of a new low before it carries on higher. That's been happening most of the years that I've been watching gold, which is now coming up to 13 years. But on the daily chart, we are trying to go a little bit higher. So is there room to retest the demand area that we're trying to create? Yeah, there is. But one slight problem with that is that in order for the test of this whole area to happen, we would need to see a value acceptance into this COMEX value. So COMEX value, just to delineate it a little bit better, is this whole area. This is yesterday's COMEX value, and I use it for open sentiment, where we're opening, how far, whether we're inside it or outside it, and all of that good stuff. But yeah, for this time of day, we have to be a little bit more mindful, because it's not the best time of day for trending moves. Those tend to happen much later. And usually I like to be patient and see how we can maybe take advantage of the price action as we go into the London fix, which is again midday my time. I am in England. Into the London fix, we usually see a pretty sharp reversal, which can start already from about 10:30. So let's see in an hour what they want to do with this. But we do have this call wall, which is now getting into a little bit of weirdness. So you can see the prices of these options are kind of drifting away from their like round numbers, and this is because of the rollover. And in fact, if I look at the CME website, I looked at it just before I came on, and I think gold is pretty close to rolling. I mean, I think it's rolled already because we have December trading at 36,000 contracts and then February trading at 66,000. So technically the rollover is already there. But usually they have to roll by Friday, by the last Friday of the month. However, we have Thanksgiving. So that's a bit weird. I don't know when they're going to roll, whether they're going to roll now or whether they're going to change the contract on Monday. Remains to be seen. Now, another interesting point is that gold rolled into February. However, silver, which I've been trading quite a bit recently, it's actually rolling into March, both of those. So a little bit of disparity between the two. Karika is saying, looks like it's going to test previous weekly low. Yeah, it could happen. So let's have a look. Previous weekly low. I mean, you know, weekly low is pretty far. That would need to be a pretty big move down. And just be, again, a little careful with gold because it does have this crazy upside bias at the moment. All this year, actually, most of the year. But yeah, so nothing too much of interest at the moment, apart from that range. When it comes to the COMEX value areas, because again, these levels do stay active throughout the entire day. So if we don't get it set up now or later, you will probably get it at some point throughout the day. What are the extreme averages doing? So we have the ADR high on gold sitting close to 4150, right where Asia high made its move. So ADR low is all the way down at 39. Is that right? It seems an awfully long way. What was that from yesterday? I think that was from yesterday. So 40. Yeah, it's about 40. 40, 92. There we go. I didn't move that one. And did I move this one? Right, so this is the average session high. I was a bit sleepy, so let me just rename that. Average session high for London. And then the actual ADR high is all the way up at 82, 83. Close enough. Full 24-hour range. Let me just change this one to maybe dotted line, just to delineate that it is a different measure. I don't know what this line, like it keeps popping up. It's very odd. What is this? Okay, it's gone. So ADR low today on gold would be hitting some quite a few options levels that are pretty important. So even if it gets down to sub 4100, I would expect price action to slow down through this area. I don't like to see this, and when we're in an area with frequent concentrations of the open interest, it causes chop. So it's never like a smooth move. So what I look for in some of my setups when I'm trying to capture a bigger chunk of the move is to try and have a distance between one GEX level and the other enough, so quite sizable, right? Because that tends to provide an area that the prices just move quicker, and they're not going to hang around too much. But are we going to get there? Don't know. On the way up, we do have a little bit of congestion, but not too much, not too much. There's just this area that we're about to run into. So if we manage to clear that, then there's really not much to stop it from going all the way back to Asia high, at which point there could be a bit of a reversal there. And we saw that on silver yesterday. So I was talking, let's do this. I was talking yesterday about the equal highs that were more visible on the full silver. So these were the ones that I was talking about. And then I was interested in the prices taking that out and then having a little short, which I did do. And then we had this painful move that was like, if you were in this and you caught it on a breakout, you would have had to have some incredible amounts of patience to sit through this, because this is a 15-minute time frame. It just kept kind of bleeding upside, but not really doing all that much. And it was all like this push-pull, but pushes into new high. It was very painful. And then when we were on group coaching, so I was on with Gabe and Hoop, I think Hoop was looking at like trying to trade the range, and I was like, just be careful, because it tends to pop sometimes right after settlement, and then it just carries on. And so I got involved in a little scalp upside on the basis of that idea that we're going to have a run into the 50-50. So I only took it, I think, from somewhere here, if I remember correctly, and then into this 50-50 area. So I didn't hold it past the 50-50 because that was my target. It did reach the ultimate magnet at 51, and now this is the new area that we've settled, 51.50, and currently London lows creating a nice new reference range. So again, we need to be patient here, because the better trade location would be sub IB low, and at the moment we didn't even extend the initial bounce low. So let me just tighten this up a bit. So still inside the initial balance. Initial balance a little bit larger than I would like it to be. So normally during the London session, which I calculate from the start of London all the way up to COMEX Open, and we're sitting at about 200 ticks of average range. Now, initial balance is pretty big. It's 138, and every time something goes over 2/3 of the size of the initial balance, to me that's always like the size of the ASR, right? So you have average session range of 200, and you really want that to be no bigger than like 100. And as soon as it goes 138, 160, sometimes it overshoots it. It generally takes quite a bit of energy to push outside of it and keep going. So breakout trades at that point should be looked at with suspicion. They're not impossible, but for this particular time of day, we have the initial balance that is larger than average. That is not a good thing for trending moves. So this is also what is telling me that maybe we're going to be more inside a range. ADR stands for average daily range. It's similar to ATR, except you're using ADR, the day, for your average. And it tells you of the average movement that you've had over the last n number of days. So for example, on the way I calculated, I like to use anywhere between 10 and 14, but then on some days, if we have too many outlier days with very quiet days, I like to smooth. So when there's a lot of inconsistency, like for example in crude oil, I will actually extend that to 40 days because I want to see what it does over a 2-month period. But generally, any kind of average ranges are calculated over 14 days. That tends to be kind of a benchmark. And it comes from the guy who came up with the ADR like many decades ago. and he tested a whole bunch of different numbers and then concluded that 14 is the number. I don't know whether I agree with that, to be honest. I think 2 weeks, 10 days is more than enough in most situations. So obviously I've done some of my tests as well. And then on the other side, you have ATR, which is typically calculated on a period by period, lower time frame, so 5 minutes, 15 minutes. And that's actually this yellow line that you see here. Now I'm hiding the numbers, but let me just remove my face here. And you will see that at the moment, silver has about 17, 18 points. Now I like to calculate ATR over a period of 9. Why? Because I think 14 is too long for intraday, and you kind of catch the previous session, which has completely different behaviors. And the way Coach Paul does it is to take 2 times ATR from a 5-minute time frame. Now I have a different way of calculating my stops. I actually like to use the average session range, so I take whatever the session we're in, and I take those 200 ticks of average, and then I divide it by a certain number to obtain the general overview of the volatility. So this is why my stops tend to be a little bit larger than normal, but still within that day's range, in order to accommodate enough space in order for me to get 2, 3, or even 4 multiples without jeopardizing the stops. So that's, you know, I don't want to be wicked out because I'm skimping on stops. That's like very painful. Right, let's bring me back into the picture here. Am I trading multiple combines? Well, I have a live account, so whatever combines, but one of the reasons why I'm doing combines right now is that I had some XFAs waiting in the wing on the old dashboard, but unfortunately that old dashboard, the legacy dashboard, is going away. So that means that all of those are going to go away too. And I always like to have a few XFAs in there. I don't like trading multiple combines. If I'm going to be honest, I like to take my time with one. And at this point, since you can't get, you can't activate them, you can't do anything with them, I want to make sure that I'm not spending too much energy on loads of them. But again, because these streams were supposed to be DAX trading, which is why I chose this weird time. And then DAX kind of never came, and we're still waiting like, a year and a half later. And I know that it will come. It's just, there's so many things that they're doing at the moment that it's difficult to kind of jam all of the wishes of everybody in question. So, we have to stay patient. And, I've worked in trading platforms. The kind of stuff that MP is trying to do with Project X, with Topstep X, it takes years. I'm a bit surprised, well, actually very surprised that they managed to get it to the point of where it is at the moment in such a short space of time. So, I know that everybody wants everything right now, but it's, it's not very realistic. So we have to be a little bit patient. So yeah, I personally do not like to trade multiple combines. If I end up in multiple XFAs, I will then designate each XFA for a particular either a set of products or an asset class, or even just like one individual time of day. So maybe one would be just for the London session, and then another one would be for, let's say, the London fix and trading metals after the LME opens. And then another one, I typically like to have 3 if I'm in that situation. And then that last one will sort of be after the NY cut, where I focus more on the energies markets. And then if I want to keep trading and I have enough mental capital left, maybe, just maybe, I will even do like a YM trade for power hour. But generally I like to trade like 3 hours a day, no more than that, because otherwise my mental capital starts to dissipate and it's just not there. And then you start to make stupid decisions, and nobody's fully immune from that, especially if you're not mindful of that mental capital and your energy levels and your decision making, right? So the longer you stare at something, our brains are very good at making crap up. So you will be, thinking that there's a setup, and then at some point you're like, oh, actually, that was nonsense. Because, you do reviews after that, after everything is said and done. And you look at the trades you've done, and some days you're like, wow, that was amazing. And then on other days it's like, what was I trying to do here? It's like, what was that? And that's when you were just extremely tired. So, at this point, at my age, and after so long of doing this, I value quality of setups over quantity. So some days if I trade once and that takes a really big chunk of the move, like 30 to 40% of the entirety of the range, I will just call it a day, and I will be like, made my money, let me walk away. So I won't look for more. And then I actually had somebody asking me, well, what do you do if, you hit daily loss limit? And then this was actually a question from group coaching yesterday. And then they were like, and then another good setup comes in. And I'm like, well, first of all, why are you even close to your daily loss limit? That's the first question to ask there. And if you devise your daily loss limit in your positions to have enough firepower to last you the whole day, even if the first part of the day didn't go well, you should have some juice left in that DLL to try that next setup. But, I think that most people's risk models are either non-existent or very chaotic, and they don't really stick to them. So for me, I have an allowance of about 2 to 3 trades per session, and usually it would be more like 2, but 3 if maybe, just maybe, both trades were either scratch or, break even, or maybe small wins, like more scalpy, because the trade didn't quite get there, it didn't have enough momentum, so you took it off early. Then I'm like, okay, well, I've got a tiny bit of a buffer here, so maybe I can wait half an hour or an hour and see if there's another one there. So that will be 2 to 3 attempts, but after the 3 attempts for that time of day, I'm done, right? So then I have to wait for 2 hours, so 3 hours sometimes, for the next day trading time zone. And then I have more probabilities that get higher and higher as the day goes on, because I'm somebody who needs data. So the more data I have, the more I can figure out what is happening probabilistically. And the more I understand what they're trying to do in a day, the probabilities of me getting it very wrong at the end of the day are very, very low. So, if I had the patience to only trade like the last 4 hours of the day, my accuracy would probably be sitting at about 70-80%. But obviously I want to trade earlier, and I do get quite tired. I have 8 dogs. They get up at like 6:30, 7 a.m. in the morning, and I have to be up, so life kind of gets in the way of that plan. You just can't stay, awake for like 12 hours and then you're like, right, now I'm going to trade. Again, the mental capital issue comes up. We have to be fresh when we're making decisions. But yeah, for me, I need typically at least like 3-4 hours of data, and then things kind of start to get very, very clear in my head. And even if I'm wrong, I know why I'm wrong, so it's not like super scary. But I always leave enough room in the daily loss limit to try and fit all of the trades that I know that I want to do in a day. Do I have price targets, or do I let stops take me out? That will really depend. I'm actually pretty good at early exits without what I call grasshoppering, meaning that I just grasshopper out of a position for no rhyme or reason, just because I think that I'm in a little bit of profit and I'm like, oh, better take profits. I don't suffer from that, right? I'm somebody who's pretty calm when I'm in a trade, and I don't really know where that came from. I mean, I was a swing trader for 5 years before I went into futures, so maybe that is something to do with the calmness and relaxedness in the trade. I'm known by being able to hold my trades for a long time. And that's how I can capture quite a bit of the move. But obviously the situation has to be right. Like yesterday, for example, on silver, I was trading late in the day. We were on group coaching and I saw an opportunity, but I also saw a limited profit. So I wasn't going to do some, massive 2-3R multiples trade and then just let it run or let it stop me out. I'm like, no, actually, this is kind of a negative risk reward trade. I only had 0.8, 0.9 until we hit the next problem level, which was a GEX3 at 50.50 on silver. So obviously that was going to be a smaller trade. Now it did extend, and then people are like, oh, I'm sorry that I don't care. Like 50.50 was my level. The probabilities told me that there was a pretty good chance that we hit 50.50 and then do nothing. The fact that it extended, I honestly could not care less. And maybe that's slightly different from most people. I used to be pretty, let's say, passionate when I was younger. And I honestly think that trading has made me a calmer person, because you can't get annoyed with things in the market. You just can't, because nobody cares, right? It's a pointless waste of energy. And you just train yourself eventually to just go, yeah, it's fine. And then also the fact that you do thousands of trades across 1 year, and it's it just becomes a drop in a bucket. It's like it really doesn't mean anything. And me getting irked over one single trade where I didn't capture 2R, even though it went to 2R, it's like, who cares? So yeah. But when it comes to price targets, as a default, I will aim for 2R multiples. Obviously, that's contextual as well. So if I'm in a trade that I think has a good chance of reaching 2R, but then it dries up around 1R and starts to wiggle, the momentum starts fading, I'd see some absorption stepping in at that level, I'm obviously not going to wait or high on hopium that 2R is reachable, even though technically it looks like it is, but we are uncertain. Like, there is uncertainty in the targets. You don't know. Ultimately, you can control your entry, you can control your stop loss, but where the price is going to go and how far, that's an unknown. That's an X, right? Like, to use mathematical references. And when you're trading with one unknown, you have to have some contingency plans. You can't just, willy-nilly go, yeah, whatever. Let it take me out. There are times when, for some traders that I've coached, it's beneficial for them to not mess with stops or targets. And in that case, I call it the do or die approach, where they're not allowed to touch it. Because I notice, as I'm working with them, their actual targets keep getting reached, but they're never in long enough. So that's harming their performance. So therefore, we need to keep our pause, the mitts off the mouse, and just let the trade do whatever it's going to do, and then we derive data after the fact, right? For most people, realizing that if they do nothing, that if the setup and the framework by which they came to the setup is valid, that the over-management of trades kills them, okay? You Lenny the trade. We hear that on TopstepTV. Oh, I Lenny'd it. And there was this one time when the house account was in a really nice opening range break trade. I think it was on gold, probably, and both me and Dakota were like, don't touch it, don't move the stop, just leave it. And then they moved it to break even, gold wicked, got them out for break even, and then I think me and Dakota were in chat, and they were talking about how it would have been a pretty good trade if they, and he was like, no, what happened? I told you, and I just went, they touched it. So, sometimes it's just better to let the stats and data do their thing without too much involvement sometimes. So, yeah. But yeah, so early exits are appropriate for some people. However, early exits, when done on a whim or nervousness or fear, that's not what you want to be doing, right? So For me, I do have core 2R multiples target. So on a range day, I would probably keep that to singles, so 1R. But singles and doubles, right? That's like the main mantra that I say. If you think there's a mean reversion opportunity with enough space, which is why I need to analyze your charts and what's on the way, like hypothetically, let's just say that I want to do a long from wherever we are now. You can see the volume is drying out on low time frames, so we're definitely rolling. So let's say I want to run a 2R multiples trade from here. I wouldn't, but it's hypothetical because I would like to get lower, at least value high, right? So that would be my better entry. And I would also want to see the extension of initial balance somewhere. Wishful thinking here for now, but we'll see. All right, so if I were to say, well, I'm planning out a trade. If I enter here and I'm aiming for 2R, so here's 2R. And I want my stop to be below the previous low by quite a bit, because again, silver and gold are both wicky. Intraday, they like to take out previous lows, especially if it's an inside low. So for example, this was an inside low within a bigger swing. So that one afterwards got taken out. So now we're consolidating. So what can happen next? Well, we do have this low now, and we're pretty early in the day. So usually what happens is that they will take those as well before they turn around, which makes it a little difficult. And this is where commodities are trickier than equities. Even though equities exhibit the same or similar behavior, those stop outs and stop runs will usually happen to the upside. However, in commodities, they don't, like, okay, now we're trending up, but commodities in general are a bit more fickle with trend, and some of them have a downward bias, some of them have no bias whatsoever. Like for example, copper right now, pretty range bound, so both sides of the market are possible. And if I was going to plan out this trade, my first thought would be, how clean was this run down? Because that's against what I'm trying to do, right? So if I have too many congestion zones, that's not going to be a smooth ride. So again, if I had the patience to trade things that are super clean, this run up is very clean. Why? Because from the point where it reversed to the point where it started, there's no congestion. No congestion. Whereas look at this one. Look at how sketchy this is. So we've got one congestion here, got another one here. We've got a little one here. If I drop down to like a lower time frame, even though we are in rollover, we'll see quite a few sort of supply zones on the way. I don't expect them to hold, but they will cause trouble. So they will slow things down. They will cause wicks, and some of them may actually bring us back into the range, and then you're going to suffer through an entirety of the range. Like the trade is still valid. No, nothing has been broken. The structure is still there. We're still holding above Asia and above COMEX value, but you know, you need to try for your own sanity to keep the drawdowns, at least in the beginning, like somewhat manageable. So if something gets all the way down to almost your stop out, I would say that that's a poorly timed trade. I'm happy to take 50% of the drawdown, but anything more than that, and I'll be. And the reason why is when you're trading with more size, you tend to not plow in immediately because you can't. You're in some of my products, you're going to have an effect on the market, so you don't want to do that. So you have to split them. You effectively have to do sort of mini iceberg orders, let's call them that way, because you know, any of us, even when I was trading with size, that's still not enough size to be like properly institutional. It's like, you know, I traded between 40 and 80 on some of my accounts, but then, you know, after COVID, I sort of piped down because I noticed that the liquidity was getting a little bit trickier. And when you're trading, let's say with 40 lots, and you want to enter 40 lots on gold, usually the number of contracts that sit there are not quite enough. So right now we're rolling, so this is very unusual. Yeah, definitely. Yeah, so don't trade until gold rolls, because this is bad. And here's full silver, same thing. So we need to wait until Topstep rolls, otherwise, yeah, you're going to be in trouble. Because have you ever seen gold dome like this? No? Well, it's because it's rolling. So really, we should already be in GCF. So I'm guessing the team, once they're awake, they're going to roll it. I don't think it's done by volume, because if it was, like I was told, this would already scan that we've changed to 66K versus 30, and it would roll. So I think there's somebody there in charge of rollover. But yeah, so in theory though, let's just talk this through. So if you are looking to go to full 2R, which is all the way up here, again, it's a valid trade, but if you're trying to trade it with size, you can't just plow in 40 contracts. Like even now, is there 40 contracts to match on the other side? No. Like, so what's going to happen if you try and do 40 contracts and long? Well, you're going to take all of these guys out and then some, and then maybe find some liquidity higher up. But that's going to have a huge effect on the price. We don't want that, right? So what you do want is to partial that, like I said, into a mini iceberg order. So that way you can enter, you have a zone. This is why we say everything's a zone, and this is the reason why. So you would maybe enter about 5 where it is now. Then it draws into the zone. Then you enter another 5. Then it sort of wiggles around a bit. So maybe you will enter another 5. And then it finally comes out. Maybe you run into some more liquidity somewhere so you can enter 10. And so on until you fill the entire position. So this is where working a position in a zone when you're trading with some size is a better option than just trying to plow in like a retail. And this is also where super pedantic single price entries to me are very retail, right? So I saw people who are trying to do that, and they're like hyper accurate. They're like, I have to get this to the tick. And I'm like, that won't work. Like, as soon as you increase some size, it's not going to work, because you get slippage. Yeah, you can do it in a sim account for sure, but that sort of pedantic per tick down to the tick entries or nothing, they're just not realistic, unfortunately. They're just not realistic. So yeah, so once you have your big position, so let's say this starts moving in your direction. Where are all of the problem areas? Well, this is one. Then this is another one. And then we have 2 more. So we technically have this one. This is all unclean, dirty price action. Another one here. So yes, it could just run through them, sure. But the odds are there's going to be a lot of tug of war as and when they're reaching all of these. And it's acceptable, but those sorts of unclean previous swings, that will scare you out of a position. If you're not entirely sure how that setup should play out and why they're wicking and by how much, that scares people. And that will take you out way before 2R. But, for example, for me, if I'm looking at Bookmap or looking at tape and I see a little bit of a pullback, but then ultimately I see another sweep higher with the position that I want to be in on, that will keep me in a trade. And then there's always a little bit of a snapback after a sweep. So then I expect that. But then I look at Delta. So I'm like, well, what's Delta doing? And it's like if they shave it off a little bit, and then it quickly rises back up to the previous high of Delta. So let's say at 500, then shaves it off to 380, and then very soon is back to 500. What does that tell you? Well, that whatever they tried to do, the reversal, it was not sustained. So it came back up, right? And delta is following. But if at any point I see delta divergence, for example, the price makes a higher high, but delta doesn't, or delta makes a higher high, but price doesn't, immediately I'm like, this is not good. So that would take me out of a trade, because there's like a bigger thing happening, and that means that I either maybe didn't look at large time frames, maybe we ran into a supply on larger time frames where institutional interest to the opposing side lies, or another thing, if you get a big order that suddenly executes to the opposing side. So I'm like, are these guys getting out? Like, why is this guy with so much size getting out here? It's like somebody who trades like 75 silver contracts and he plows all of them in, let's say at 51. And I'm like, what do they know? And why? And then there's an additional layer to that when you have a resting order and it doesn't go away, so it's not a spoof, and then you get to that order and they execute it, it's like, why? And then you have to wonder, it's like, was this a stop out? But probably not, because whoever had the resting order there, it means they have conviction. And then as we approach it, that order gets filled. So I'm like, I have to assume, because we can't tell for sure whether it's a stop out or a new entry, but you can sort of get it from context, right? Those kind of moments, they will make me double think whether I should still be in a position, because you always want to be on the side with the big players. Trading against them, I've never been in favor of that. It's like, oh, you were trading against institutions. Yeah, if you're doing it wrong, but if you're doing it the right way, you should be seeing how they're seeing the market. And this is where things like mentor Q, options levels, tape reading the proper way, it helps quite a bit. But, it's difficult because it's a skill that takes a long, long time to figure out. So yeah, this GC tape is terrible. Like the dome, look at it. I'm gonna have to wait until everything rolls into the new contracts, because I suppose silver looks okay, but I don't want to trade gold when it's looking like this. This kind of looks like RBOB out of ours. It's bad. So yeah, this is the rollover in effect, and we need to roll. So we need to wait until the team is awake. Let's have a look at some more questions. I know Amanda had some. So Amanda says, good morning, Dee and everyone. I spent a lot of time capital on the market since you're discussing this topic. I'm wondering if it would be more beneficial to have multiple accounts that are traded in. Separate time windows dedicated to each time window, so I'm able to individually track stats. Yes, absolutely. Absolutely. However, in the I see a question from one of the VIPs. I'll tackle that, Gaurav, in a minute. So yeah, so if you want to do experimentation, like, you don't necessarily have to have separate accounts if you're exporting your trading into an external platform, because there are, like, unfortunately, Topstep journaling is great, right? It's got a nice calendar and whatever. But one thing that I did ask them to do, hour by hour performance, because that's where some of the others, like Edgewonk, Tradezella, they're a little bit more sophisticated because they are dedicated journaling platforms, obviously. And you can look at hour by hour performance. So you can easily track that even across one account. But if you do want to do it through separate accounts, because you don't want to use an external journaling platform, even though I think you should, because once you lose the combine or pass it, all of that data goes away as well, and you really want to keep that. I would, yeah, maybe have a couple of them, yeah, for experimentation purposes, obviously. Go for the cheapest option, go for the 50K, because it's an experiment to see what time of day works best for you and how those day trading time zones work for you. So it is an idea, but obviously for some people that'll be an additional cost. that maybe you don't want, you know. I mean, right now, obviously we had the big news, and like I said to someone yesterday, just wait for one day. So yeah, zero activation accounts. Now those are pretty good for people who don't take a million attempts to pass, right? So if you need to reset multiple combines and you need to do that over a month, obviously the zero activation may not be for you. So you want to keep that cost down. And then, yes, while in theory the activation fee increases the cost, if you are needing 20 combines before you get one funded account, that defeats the point. But if you're somebody who, you know, loves the combine, caresses the combine, wines it, dines it, you'd be really nice to your combine, then the zero activation is amazing. Like, you guys know me, I take forever. You know, I take it really slowly. I mean, look, if I'm really burning for a new account, I can pass it in 2-3 days, no problem. But I don't like doing that. You know, I would prefer to have some accounts where I spend at least sort of 8-9 days just taking it slow, you know, normal positioning, nothing too crazy, trading 2 to 3 minis maybe, you know, just with a bit more size, but not going absolutely nuts, and just taking your time, then passing it and having it there. Now, for me, it takes on average 9 days, but because on combines I don't trade them every day, I might take 2 months, but it's still only a couple of months. So, you know, for someone like that, going the zero activation fees is perfect, right? Because you get what you pay for. You pay one, you pass in a month, that's your cost. So overall, you know, pros and cons, obviously, depending on your skill set, as always. So yeah, but Amanda, yes, separate time windows, 2 combines, and yeah. Gaurav says, if it's possible, could I please send the video link for the recording of my VIP session on my Community Owners channel? Yeah, so I had trouble uploading that one because I unfortunately tried to do it on Loom as usual. It kept throwing up errors. I will keep trying, but I've noticed that every time there's a video that's longer than about an hour and a bit, it starts to mess around and it starts to throw up errors and it doesn't want to finish the upload. So I've had a lot of trouble, but I will try. I am trying. I actually spent 3 days trying to upload that last week. So yeah, in the future VIPs, we're going to have a completely different way of doing things. So good things are coming. Since we're talking about the VIPs, do I use Bookmap? I do use Bookmap, Keegan, quite a bit. In fact, I always have it open. Here it is. And you can see my Bookmap settings on my YouTube channel, which is Market Stalkers. So if you look for that, they used to have it underneath this video. Now they just have my Twitter, where I'm not really active, so I don't know why. I mean, I post about dogs and stuff, and I repost Topstep stuff, but I don't know, I just got really tired of Twitter. I've been on Twitter since like 2013. I'm tired. So yeah, what was I gonna say? Where was I? I just lost my train of thought. That's brilliant. What was I talking about? Oh yes, yeah, I wanted to share some stats with you. Now, everybody knows that the pass rate of combines in the industry is very low, and then the ones who make it to the XFA industry-wide with no help, no nothing, is sitting at about, I think it was about like maybe 10% or something. And then, or was it lower? Was it like 5%? And then those who get to payout, that was like 1%. So I just wanted to share some stats from how the VIP actually changes things for the pass rate. So, and I have everybody's teams here, and everybody did remarkably well. Remarkably well. So let me just see where. I'm just gonna try and find it. Okay, here we go. So if I, so is there, I'm just hoping there's no, I don't think there's any, it's okay, there's no personal information anywhere here. So let's have a look. So for those who want to know how the chameleonaires did things, so we actually had a 73% pass rate. This is my chameleonaires, for those who attempted. At the moment, 31% of those kept their XFA. Now, the problem with group coaching is that I sometimes feel like I'm talking to a wall, and it's not really until like the very final week or two where people are like, oh my God, Dee's right. So, you know, even though I say in the beginning, you know, that my very first introductory lecture in the VIP is usually real objectives and how not to behave in an XFA and what are the things that are going to make you lose it. No, we still have people who pass in 2 days and they lose the XFA in 2 days. It's like, and I think is the reason for that is that people, and you can see everybody's season. So here's lunatics. Again, we all have crazy pass rates and crazy amounts of people keeping, like Coach Robert smashing it with 50% of people, and 14 passed, 14 lost it. It's crazy. But we all had a massively higher percentage than the industry average, which is very low, and yet here we are where most people are passing to a rate of 70%. Now, yes, some people still make that mistake to not follow the rules, and they get anxious, they get nervous, and they blow up. Or the ones that just don't listen. So it's like we as coaches can only do so much. And in the future, we do want to have more accountability. So, you know, I do believe we're creating some amazing stuff on the back end, and it's going to be super exciting for the next year, for next season. But yeah, there's no doubt that the VIP program massively increases your chances to pass and keep your XFA. And, you know, if we have accountability so that we can actually block you from doing stupid things in the future, basically being your risk managers, that's going to increase even further. Because if I can prevent you from going, like, for example, somebody going into an XFA and telling me, I'm only going to trade 3 trades today, and my maximum size is going to be 2 micros. And then I look at what they're doing. Not only did they not follow that, but they traded 20 trades. And then they also increased from 2 micros to 4 to 6 to 12 to then losing the XFA or making a massive dent on that first day. So if I can just agree with a trader, you're going to trade 3 and 2 micros is all you can do. And they'll be like, okay. But then I see them doing wrong things. We will be able to actually set those parameters going forward, which is amazing on our end. So yeah, it's like, yeah, you can try and blow it up, but you will be locked out after 3 trades on 2 micros. You try more, it's not going to let you. So it's like saving you from yourself at that XFA stage. And I think many people need that, especially if they've never been in an XFA. I actually had somebody who got into an XFA for the very first time, and they actually took a payout out of it. First time ever. First XFA, first payout. Amazing. So that's the stuff that we really love to see. And, you know, it's such an amazing opportunity. It's just like I'm so chuffed to see everybody's stats. Everybody's stats are just absolutely smashing. Could I give a brief 999 Malachi? I can see you. But you know, yes, sometimes I'm slow to read messages. Can I explain how the dome and the volume correlate to the charts and taking a trade? The dome doesn't really correlate to charts because you can't see the resting orders on the charts. That's not a thing. This is why we have level 2 data. Volume, again, also not correlated to the dome, although if the orders are filled, you can sometimes see the reaction from that large order. I'm just going to clear my throat because it's annoying the hell out of me. Yeah, so volume can correlate if the market goes in the direction of whatever the price is doing. Now, the problem becomes where absorption happens, where you see a big lot of volume. What is going on with my voice? I have like frogs in my throat today. Amazing. So you see a big volume bubble on Bookmap, but price is not moving. You won't be able to see that on a regular chart because you can maybe see it in a spike volume, like a sort of like a volume churn on regular volume chart, but you won't necessarily correlate that to prices not moving. You will just see, oh, it's a big volume spike. But really, after any big volume spike, you want to see something happen right after, right? So to get like the most recent thing here. So we had a big volume spike to the downside, much bigger than the surrounding candles, okay? Then we had a quick reversal from value high, and then that's followed by even greater volume. So what happened? Well, the price reacted to this volume exhaustion with a reversal. But there are times when you see the big volume, and they're trying, and they're trying, and they're really trying, and there's volume churn. That's what that's called. But the price is just not moving from the bottom. So that's called volume absorption, the absorption of orders. So that means somebody's buying, and they're buying, and they're buying, and the bubbles are growing, the volume is growing, everything's growing, but the price ain't moving. So that's another thing that you could see on the price chart with just volume. However, there are many more nuances, like, for example, a sweep. A sweep is a quick vertical move, either up or down, that takes out several prices at once and is typically followed by a larger volume. But then again, how big of a volume, you can actually see the size of orders in Bookmap, which you can't see easily unless you have some sort of a volume ticker or, you know, something. And even so, to me, time and sales and all of that, it's always been very cancerous and like a lot of information that you have to memorize. It's like, why do we need to memorize it when we have order flow tools, right? So this is where I prefer to smush all of the order flow real-time orders, because the auction process is order flow as well. It's a result of order flow. So I suppose that the simpler auction way of tracking things would be to look at a TPO profile or a volume profile. That would give you clues, but for the actual real-time executions, yeah, you really need level 2. So I always feel like I would be trading blind without it. And for me, that part of trading was quite difficult, you know, in 2013 when I started, because I traded just by charts and I didn't understand the value, because I'm like, well, it's going to move anyway, right? But then the more that you get into the timing of your positions and management of intraday, then you start to realize that there's a deeper layer to that. It was kind of like a behind the scenes, you know, it's like that you see the show, but then all the bloopers behind the scenes are something that we don't regularly see. And yet those are the interesting parts, if that makes sense. But I wouldn't say that the resting orders on the dome, which is what the dome is, and the actual volume that goes through, they're not that correlated. I mean, they can be in some cases, but most of the time, Wait. I do apologize. I have a new allergy medication that I reacted to it badly, and it messed up my throat. So I thought it was okay this morning, but obviously I'm still there. And I just sound like I have a cold or something, and I don't. It's just literally it was too strong for me, I think, and it just caused like huge dryness all over my throat, and my nose was like really horrible. And I think I'm not taking it anymore, obviously, because I'm not going to do that to myself. So yeah, I'm just kind of trying to get over it, and my throat is killing me today. But yeah, so we have another question. Dee, how many of our VIPs have gotten to a live account? Those are some good numbers. So it's still really early, because remember that the VIP program is only for 3 months, and many people take like a couple of months to get their act together, and then once everything clicks, it typically starts clicking towards the end of those finals for a couple of weeks. And those who have followed all the instructions, you typically have 3 types of traders. You have the ones who go into a VIP thinking, now I'm going to be the God's gift to trading, but let's see what they say. And then throughout that process, they realize that their process is not that great either. So they're like, actually, I could probably use this. But those are the ones who are the most likely to blow up because they think they know everything. Then you have the ones who are very open, very coachable, and they come in with an open mind and they just go, I'm going to soak in and follow all instructions here because I've done it my way. It has not worked and I'm sick of it. So this is the person who's been trading, and most of us have been trading for decades, at least like 15, 16, 18 years, and many of the coaches even up to 30 years. It's crazy. I mean, we have Coach Jack, who's been trading for, I don't know, at least 40 years, right? And he's amazing. So, you have all of us here, and you can just be open-minded and just go, I'm going to follow what the coach says. And yet, what I tend to get from people, I say, trade micros to begin with. It's not forever. And then somebody goes, but I never trade micros. I only trade minis. And I'm like, well, okay then. How's that working out for you? Have you ever gotten a payout? Have you ever held on to an XFA? No, I've never been in an XFA. Okay. So can we try it my way? And they're like, but it doesn't make sense for my style of trading. So I'm like, explain your style. I captured 2-3 ticks on NQ. Why? When we have 1 million ticks? Like, on a product that moves 1,500 ticks, you're taking 2 to 3 ticks at a time. Again, why? Well, because that's my strategy. Okay. But you've never been in an XFA. Let's go back to the drawing board, because what you're trying to do there is maybe something that would have worked like 20 years ago when ES was moving like 20 points a day. So you would take 30 to 40% of that range, which was indeed 3 to 4 ticks. But that doesn't make any sense today, because doing the same thing, applying the same statistics and data, you would need to take, like, let's say NQ has an average of 1,500. And, if you're taking, a chunk of that, even like, let's say 20% of that, you should be capturing 300 ticks, which in points is 75 points, not 4 or 2 ticks or, tick. I mean, it's crazy to me. So I said, okay, so maybe if you want to do that, you're basically hyper scalping. Have you considered looking at the dome and then capturing where the bigger orders are? Like, for example, right now on gold, we have this guy at 43. That's going to get hunted because everybody can see him, right? So you would front run that, wait until that's filled, and then that's your scalp. But it's a different way of trading. And, so that's the type of, some of the traders that we've had, right? They're like hyper scalping and they think that's okay, but it's not working for them. And yet they're not yet open enough to go, let me see what you've got to say. And then, I start talking about options and start talking about supply and demand and the auction theory. And some people get lost because they're like, I've never heard of these concepts. And I'm like, yeah, that's exactly why we're here. And I think I'm pretty good at explaining slightly more complex subjects that look like they look complex on first glance. But then the more you learn the methodology, you actually realize they're incredibly logical. And then you start to realize, oh, actually, that makes sense. I see, neutral day type. We're pulling for both sides, so breakout's less likely. Ah, okay. It's not rocket science, guys. It's just maybe there's quite a few things you need to think about, which trips people up. But it's not. It's remedial math. Like, it's seriously, it's not. You don't need to be a PhD statistician to make it work. But you do need to have a rudimentary understanding of that this is a probability environment. And yet you attach so many emotions to it. So the people that are the few and far between that we've seen in the VIP are maybe about 5 or 6 people who are ultra coachable. They literally come in with ears and eyes open and they follow instruction to the best of their ability. Those are the ones that see most transformation. However, obviously humans being humans, people come in there and go. So it's still too early for the live side of things, right? So we'll see. And I'm sure there's stats somewhere. But I do know that even the VIP alumni before, a lot of them are still in the XFAs. I think a few of them have got to live. But, live account is difficult. You only have one account. There's a daily loss limit that now is scalable, but it's a slightly different ball game, and it does maybe take a couple of attempts to get it right. It's not easy. It's definitely not easy. There are people who make the transition and then struggle and then don't do very well. So yeah, all of this, I'm looking at silver, I'm looking at gold, it's all looking very rollovery. Is that a word? Rollovery. But yeah, I think this is dangerous to trade in right now because, and we are experiencing gamma pinning, right? I do think it's going to move higher. I do wish that we rolled into an actual new contract, but we didn't. So, I would suggest for everybody to wait until we roll both gold, silver, copper into the new month, because you can't trade the dome when it's looking like this. Ultra thin. Even on an XFA, in a sim combine, it's going to give you nonsense prices. And this is not going to be Topstep platform. This is just what's going on with the current GCZ contract. It's rolling. So you know how I said they're going to hunt that at 40? There they are, right? So one of the things that I would be looking for now, these guys have been waiting there. Are they trading out? I don't see them trading out. It was a sell, it was a short, it was a seller. I'm not seeing them, so they pulled it. But everybody saw it, they hunted it. Still, the scalp based on the dome would have worked. It's not my style of trading, but that's how it used to be. In fact, back in the day, if you signed up for, any kind of an exchange package, all you would get is dome, 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 dome. Like just domes all over the place. And you would be like, what is this? And I remember looking at it for the first time as somebody who came from a charting background and swing background. And they gave me the CQG account. And I'm like, where's the chart? And they said, oh no, it doesn't, you have to pay extra for the chart. And I'm like, okay, so what do I do with this then? And then I got a lecture in the dome and depth of market and how it all relates. So that kind of interested me, but it was probably another 4 years before it really started to make sense to me. And then, it wasn't really until Bookmap that I could smush all of that information into a usable pattern recognition. I can't work off just the time and sales, right? So I don't like just pure numbers. As soon as my brain sees this, and I used to be a musician, I check out, man. I just check out. I'm like, 41, whatever. But give me a cartoon-like thing with like little bubbles and like little numbers here and, you know, little lines and stuff. I'm like, my brain is like, oh, what can we see here? And it's just the way I am. And, you know, I know my strengths, I know my weaknesses. And one of them is that pure numbers, for me, are boring. Like, I'm sorry to say, but they are. I'm a nerd. I'm definitely a nerd, but I was never too keen on doing the equations with two unknowns. And then the worst thing is the textual logical assignments. You remember that? If train A is leaving and the train B is going with, you know, your grandmother to its summer home, and they're traveling at 53 miles, I'm just like, I'm just not there. Anybody else like that? Or is it just me? I don't know. But those sort of textual assignments where you're supposed to derive something from a text, I'm like, just give me some poetry, man. You know, some freestyle, something. Just don't give me numbers that I'm supposed to derive. And that, along with pure dry numbers, that is not comfortable for me. Okay, I can do it, but it's not comfortable. So when Bookmap came along, I was really impressed with the way I could read everything that I know should be there at just a glance. I don't need to go down the rabbit hole of time and sales. I can see it, and it stays as a historical event. That's why I'd resonate with it, right? So it's just, you know, it's personal preference for sure. Some people find Bookmap too overwhelming, and they like time and sales. So it's the same information. You can use volume here, time and sales here, dome here. It's the same thing. It's just different folks, different strokes, right? How many have gone live in the past VIP groups? I don't personally have that information because, again, we just got this for this this last lineup. I'm sure that maybe Coach Roberts could come up with that, but again, it's all done manually, so he would have to like go through. Again, we're building systems that will enable us to track all of this a little bit better in the future, or a lot better. But again, remember that it's still all being bettered, improved, developed. You know, it's a huge growth period for us. So, but yeah, I'm sure that if we all sat down for like a week to go over, I don't know how many traders. I mean, it must be like 550 this season, 550. So yeah, it would have to be like it would have to be like 1,600 traders that we would have to go and see who went live. A little bit of a task, right? But yeah, in the future we'll have a way of like tracking that. I think JD actually asked that question as well, like how many of them have gone live, and it would be a very, very interesting statistic, definitely. So but yeah, I would be interested to know how many of them took payouts. I think that's pretty relevant statistic. Yeah, I think this is the most boring price action I have ever seen. Nice job of keeping us entertained during this. Absolutely, yeah. Yeah, this is rollover for you. You know, and sometimes a part of good trading is recognizing that the dome is thin, recognizing that it isn't rollover, and just going and doing something else. You know, I play video games. I just finished Death Stranding 2. It was amazing. Anybody else play that? I like my sort of odd sci-fi, slight sci-fi games that are set in either post-apocalyptic future or actual space. Those are my favorite. Can't tell, I'm a nerd. Yeah, no, we have all the stats, but they're not aggregated. You know, we can go individual traders. But to actually aggregate them into a usable, readable format, someone usually poor coach Robert has to sit and do that, right? And I think last season we tried to do it through these data aggregation platforms, but it just didn't. I don't think we had a dedicated team who was trader focused, like because you really, for trader financial type data, you need to have somebody who is not just a data scientist, but also somebody who knows how the trading combines work. Now, unfortunately, in the industry, you don't get too many of those, and they tend to be quite expensive because, you know, it's like extra skills that you need to have as a sub layer. And I had an IT recruitment company at one point before COVID. So I do understand the process of hiring and how the individual niche skills can affect the rates that those people want to be paid. So yeah, it can get like extortionately expensive. So last time we kind of tried with just a general data aggregation, and it was a little messy. Like it wasn't terrible because it was still useful. I could at least see what the numbers were, but then again they were tracking blown combines that people kept trading. So both me and Coach Jay's teams, we had like a couple of individuals that just carried on full porting blown combines. So that kind of massively skewed data. So we weren't happy and we were like, this is not going to work. And then everybody agreed that we need to do better. So, you know, we are building data aggregation. That's going to be really awesome. But yeah, so it was just like a VIP program. It was just something that MP came up with on the whim while he was in a pub, as you do. And it turned into this beautiful journey for so many people. So, you know, and now we need to make it even better going forward. So, yeah. The Dark One says, kind of feel like Topstep accidentally dropped the ball in this rollover. I've never seen the roll end up this thin on a dome. No, it's not the first time. So I've had this issue. Again, it's not perfect. We're still trying to build some other things. Like, you know, they were really focused on the risk side of things, and I think they're still focused on that. Now they're focused on the tools that we have inside it. So yes, I would like to see somebody actually in charge, but I've had, for example, Crude Oil rolling over, or even Crude Oil not rolling over. I don't know whether you guys know this, but I was the first TopstepX live account. Yay. All the bugs went through me. Here we are. So I noticed that so what was that? That was March 2023. And Crude Oil rolls every month. Like every single month. It never skips a month. So we get to like the 17th, and the next day I'm you know, still trying to do like a stream and stuff and whatever, and I didn't even think to check the contract. So I enter and it's like dead. It's like watching paint dry. And I'm like, what's that? What? So I realize that whilst I rolled, it didn't. It took a full 5 days for them to roll into new contracts. So obviously I got in touch with the risk team and I said, we're not rolling contracts. Like, this is a problem. And they said, well, it rolls by volume. And I said, no, because if that was true, and you know, the risk team, they don't know. Like that, it's you know, they are the risk team. They manage risk. They don't manage contract rollover. So I do think that they're thinking about getting somebody who will be in charge of rollover, because this has happened in the energies markets. It happens in odd markets. Like, for example, it happens in cattle. I think it occasionally happens in RBOB. In fact, let's see if RBOB rolled, because last time I looked. Okay, so now they rolled it. But did heating oil roll? Okay, heating oil rolled as well. That's good. But here we go. Metals have not rolled, right? So again, somebody needs to be in charge of that. So again, another, you know, hire of a person dedicated for contract rollover. That will be, you know, it's how things work. You know, you can't just go, well, Topstep, do this. And then, well, who's going to do it? You know, it's a matter of stuff, right? So yeah, they didn't drop the ball. I just think that this is a recurring issue that they're trying to sort out, and they will. But again, a lot of people trade metals because metals have been rocking and rolling. So I get it. I understand the frustration. I'm there with you because, I can't trade silver now until it rolls, which means there's probably not going to be any trading for me today because I was really hoping that I can trade silver. But if it doesn't roll, I'm not going to trade a dome that looks like this. So yeah, valid point. Criticism, completely justified. But yeah, it just is what it is. Sometimes you used to have platforms that also had trouble rolling. Like, for example, AMP on MetaTrader 5, you have to roll it yourself. And then every so often, if it's a super forward contract, like, we, for example, rolled Platinum, which, I can imagine not many people trade, but some people traded, right? And we rolled, and I look at the offering on the symbols, there's no Platinum. So I'm like, there is a Platinum expired, and the current one, which also basically expired. So I'm like, I had to get in touch with the support and go, guys, you have not included the Platinum. So then they kind of included, but you have to reach out to them to tell them. So it's not, it's just how life is. So if you notice something, maybe ping off a support ticket and say, hey, we should have rolled. Maybe that'll get the ball running, and maybe somebody will go, oh, holy shit, okay, you're right, they're right. So, so if you want to push the rollover and it doesn't happen today, why don't all 300 of us assault Windy? Rollover in gold and silver. Didn't happen. So maybe the barrage of support might poke them into action. But yeah, so I agree. Lance says, hey Deeyana, so you're a consistently profitable day trader on NQ futures. No, I am not an NQ trader at all. I hate the thing. I trade gold, I trade silver, I was an energies trader for like 12 years. And then Crude Oil and I had a disagreement. But yes, I am a live trader at Topstep, and I do take payouts, but they're not, like, for me, at this point, after nearly 20 years, prop accounts are more like, oh, cool, there's extra money, sort of thing. And, I'm probably not the best example of people who are just starting out and they're like, oh, yeah, I want to create, like, a side income. Because it's like, to me, it's nice to have prop accounts, but I also have my own personal accounts that are way, way larger than prop accounts. So for me, prop accounts are fun at this point. Now, if you talked to me about 10 years ago when I was still a new prop trader and I was still scaling my capital, I would be like, yeah, man, like I take payouts every month. And back then, the way things used to be, you didn't have an option to choose a payout. If there were profits, they would pay you out. And usually it was 20% of a default payout. 20%. If you wanted more, then you could request it more. But then I also worked for a company where 20% profit split was all you got. Now that meant that they pushed size like crazy because they wanted to make everything worthwhile for you and the company. And then you effectively had to make, like, for example, there was a month that gross income for the company, I made 200K. And obviously I got paid out 40. So it was like, wow, that's amazing. Because that was like amazing money, right? But it was just a different environment. It was a long time ago. So yeah, I'm probably not your kind of like, oh yeah, I must take payout because my bills depend on that. I'm like, oh cool, I have an extra 10 grand. I'm, buying a new camera or something. So all of the stuff that comes out of prop, usually goes into more trading stuff, right? So I bought Bob over there, this whole new computer, because I actually bought a new house in May this year. And my old computer didn't make it. Something happened on the way over, because obviously we had a moving company. And when it arrived, my actual desk had a massive dent in it, and the computer suffered basically a ding. So when I tried to boot it up, it wouldn't boot up. So what happened? I had to get a new computer. So for like the week that I didn't have a computer, I was on a laptop, and yeah, you can probably find videos of me taking, $3,000 out of like 3 accounts that I had. So it was like $9,000 all in. Where did all of that go? It went on the trading computer, and I also bought a new camera because it was time. So yeah, so I'm probably not like the best example of like, oh yeah, you have to have prop and stuff. A lot of my cash does come from trading activities, but I have a software firm that makes trading tools. We make mechanical trading algorithms based on some of my strategies. All of that is trading related, but not necessarily prop payouts, which, for me are just fun at this point. And it's like, great, there's prop payouts. What are we going to buy now? More bickies for the dogs? Buy really expensive biscuits. Or, chews and stuff. They actually like this, they like these like salmon biscuits with like biotin in them and stuff, and they are pretty nice. They're made with human grade ingredients, but they come in like tiny little bags that are like 5 pounds each, tiny bags. And I have 8 dogs, so naturally I have to buy a whole ton of them so that they can like have it. And the rest of them, they will be like, yeah, biscuits are okay, but these ones, well, they know what's right. So stupid things like that. I buy a lot of stuff for dogs. A lot of the time prop payouts will go towards doggy daycare costs, because again, 8 dogs in daycare gets expensive. Kind of like having 1 child in college. So, everybody's at a different stage in their life. But yeah, most of my income is trading related activities, and then small part of it like rental and stuff, but very small. So yeah. Cattle and hogs rolling to G contracts. Yeah. Green today. Lance, I have not traded today because my metals are in rollover. Like, you are obviously somebody who just decided to join. And first of all, you clearly don't know anything about me either, because you're like, so you're an NQ trader. It's like, I'm well known in the industry by somebody who hates NQ, but welcome, Lance, welcome. Just because everybody trades NQ doesn't mean you should. Dark One says, my comment wasn't in any way trying to bash Topstep. No, I understand. Like I said, criticism is justified. I totally understand. BDW Gaming. Hey D, I trade nat gas a lot. So do I. Welcome, colleague. And I've noticed a directional movement almost every day around 6 a.m. London time. Do you know what happens at that time? So there is sort of pre-market activities that a lot of commercial hedgers might use to put some positions on. But you may also have noticed that on a lot of the days, then nat gas pretty much goes dead. And right now, we are going into some colder weather in the Midwest. We are seasonally at the time of the year when nat gas does start to move quite significantly. So maybe nat gas is the one to trade. That rolled already. I did not really like the look of it. First of all, we just went massively down. Let's see what the levels say. So we have implied volatility down to 447. So we still have some space there. So we still have space until we hit the implied volatility on the day, which is kind of similar like ADR. And so it's 447 down here. Are there any stronger levels here? We have GEX1. Not really happy using GEX1 for anything. Because usually it's not For some reason, it's not that strong. We have HVL and GEX2 up towards 460 and 465, and then a gamma wall up at 480. So if I see some sort of long directional intentions, I may want to position myself long somewhere around 447. But it would be against what's going on right now, because let's have a look at the weekly, just as the end of the stream. It would be a justified move, because we have had, what's my point doing? We have had, like, this change in sentiment. Like, I would call this a change in sentiment, but it's so messy. It was a very messy thing. We're hitting the edge of the distribution. I wouldn't call this a proper demand area on the daily chart, because it doesn't have like follow through, and it could easily just go down all the way to the very bottom and then turn around if it turns around. But I am slightly long biased in natural gas. We just need to see a little bit more commitment. And obviously colder than usual weather is what we would need to push it into a proper trend that seasonally happens around this time of the year. Without that, it's a little bit tricky. But yeah, so let's see what NYMEX brings. It is usually... Here's the thing. I noticed somebody keeps buying nat gas very late in the day. So you would get to... And, you know, they're not there every day. Not there every day, but... You get to sort of, this is the 6 a.m. that you're talking about. Yeah, I think this is just Asia. This one is particularly the contract rollover gap close. So that's what that was. Now, if I go to... So there's nothing specifically that happens at that time. Like there's no London fix, there's no London open. The only thing I can think about is maybe Tokyo closing some stuff. But there's no real exchanges, so to speak, that are active with any sort of price spinning. Because price spinning in metals, depending on the metal you trade, usually happens either once or twice a day. And that time varies. Like for example, for silver, it happens at London fix, which is midday. But then for gold, you have, I think, 10:30, and then you have 4 p.m. So, you know, this is why you see the day trading time zones where things reverse because of those price spinning moments. But on natural gas, like you have maybe a post-NY cut connection. Don't really, yeah. So that's like Euro close. But that early, and the fact that it's just like a one move, I'm never awake at that time. So, you know, I usually wake up around 7:30 when one of my dogs wakes me up. But yeah, it does seem to happen on a lot of the days. So today it happened downwards. So what I usually like to do is these sort of moves. So here's a day where my day range fill, when we were moving up, and you know, everybody was like, up, it's moving up. And this was a GEX2 level, I remember this in the old contract. So I was in on this, and then I closed it because of the time of day. I have a time stop rather than just a price stop. And then I actually saw it on Bookmap that there was some absorption here, and they started to lose delta like really rapidly. And then the bubbles increased to the short side. And I'm like, this is day range fill, so I'm going to do that. And then it, you know, it smashed all the way down and then some. And then this is your commodities. That's how they move. They're directional until they're not. And then all hell breaks loose. But yeah, so I am looking for this. Here we go. So this day, NYMEX for most of the day. Even London was a bit quiet. But most of the day, NYMEX, complete snooze fest. Then we get to, again, day range fill. And it just jumps. It's like, what is this? It's the day range fill. I call it the day range fill. Okay? I just saw movement in natural gas as well. So let's go to the current price. Some commitment there. Whether it's going to be sustained, I don't know. But I would like to see it down at 447 before I commit to any further longs. It might go up from here, but I've got nothing here. Like literally, it's like no levels. Anyways, that's all I have for you today. Let's see what Tuesday brings on this very, very short week, because it is Thanksgiving. It's Turkey Day for our American friends. We in the UK don't celebrate that, but yeah. So we'll have one more day tomorrow, and then you guys can enjoy. I'm probably still going to do some work, but I will be there with you in spirit. I can't eat turkey, but I will be there to celebrate with my colleagues in spirit. That's all I have for you today. Unfortunately, no trades. We need to wait for the contracts to roll. All of these levels that I've given you, they will be valid for until the moment that the contracts roll. So let's just fingers crossed that we do roll today. But without that, I would be super careful entering any trades in metals until then. So yeah, just a little warning there. Anyway, I will see you tomorrow. I don't think I am on main broadcast for the rest of the week or tomorrow. So I will wish you a very good day. So don't do anything that is a little bit muppety if you can help it. I know some days are hard. I get it. But anyways, this was the Euro Trade. I'm Marcus Stoker D, and no trades, quiet markets, loud lessons. I will see you tomorrow. Take care.